Hey everyone, in this video I'm going to answer which one I think is a better stock to buy right now, QuantumScape or ChargePoint. To answer this question, I'm going to look at various different financial metrics from each of these two companies. So let's get right into it, starting with looking at the industry.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Now, what I have here is a chart of worldwide, the number of battery electric vehicles that are in use, and this is the change from 2016 to 2022. So as of 2022, there were 18 million battery electric vehicles in use worldwide. Now that's a relatively small figure compared to the hundreds and hundreds of millions of legacy internal combustion engine vehicles that are in use worldwide. Why is that important? Well, both QuantumScape and ChargePoint target the electric vehicle market, the charging network for electric vehicles. QuantumScape is developing innovative solid-state battery technology that, if proven effective, could change the way vehicles charge worldwide. It could improve the speed, reliability, and safety of the charging network. ChargePoint as well is building out its charging network and trying to capitalize on the growth of electric vehicles. Now, this industry is likely to continue growing because of government incentives and government regulations. That's really the force behind the growth in electric vehicles. Organically, consumer demand is weak. People do not want, generally speaking, people are not in favor of electric vehicles if you look at the rate of organic growth in areas without the government incentives. However, government regulations that are forcing people to switch over and government incentives that are giving people thousands of dollars to purchase electric vehicles is boosting this industry's growth. Now, this will last for another couple of years. 2024 is going to be another year of strong government incentives, but then starting 2025, those government incentives could start to decrease, and that will decrease the rate of growth of electric vehicles worldwide. Now, they will still continue to grow because government regulations are still in place. Now, that is, if they don't change. Governments are known to change their policies, right? Just because they say they're making it mandatory for vehicles, a certain amount of vehicles, to be electric by a certain year, doesn't mean that's going to be the case. It's not written in stone. They could go back and say, you know what? We change our mind because of this or that and this factor. We're going to change, we're going to pause, we're going to delay that deadline. And so that will slow the growth of the industry. Nevertheless, right now it's growing rapidly, and ChargePoint and QuantumScape are in a position to benefit in this growing industry. So let's start with looking at QuantumScape specifically. And what's been going on at QuantumScape is the company has been spending billions of dollars trying to turn their innovative solid-state battery technology into a business, into a product, right? They've got the technology, they've tested it, they've shown that it could be effective for worldwide use in charging electric vehicles, but now they need to turn it into a business. And so that's where the bulk of the investment has been going for QuantumScape. And in the third quarter, the company mentioned that it began process qualification for the Raptor equipment on schedule. Process qualification involves producing films, gathering data, and refining the process. Now, they're pleased with their early returns of their qualification testing, and while there remains work to be done, they continue to target deployment of Raptor by the end of this year. So that's been promising. And in 2023, the company has made some promising steps forward and hit some significant milestones to give investors confidence that it can turn this innovative technology into a product and ultimately into a profitable business. Sticking with that theme, QuantumScape hired Dr. Sivaram as their new president to help increase the manufacturing and develop the manufacturing capability the company needs. The doctor comes from Western Digital, which was a global leader in solid state and magnetic data storage with tens of millions of units shipped and $18 billion in revenue in 2022. So He has the experience in developing and implementing these manufacturing processes that are going to be needed to ramp up the production of these innovative battery technologies. So they're making steps forward, although they're still, remember, pre-revenue. They haven't yet started to make sales to generate revenue, and so that's a big risk for the company and investors in the company, is that it's yet to start generating revenue. So their focus on 2023 is simple: turn the corner from prototype to product. So with just a few months remaining in the year, they're maintaining their aggressive near-term schedules and potentially bringing this disruptive product to market in the near future. So with that in mind, they've also taken steps to strengthen their strategic position, strengthening their balance sheet, and giving themselves enough cash to last until 2026. Because if you're not generating revenue and you're spending money every day, that's really depleting your cash balance, and so they had to take steps to reinforce their balance sheet. Speaking of their balance sheet, you could see the company had $1.137 billion of current assets. Most of this is cash and marketable securities as of September 30th, with little to no long-term debt. So far, investors have put in $4.184 billion in paid-in capital. See that highlighted there. And QuantumScape has lost $2.767 billion in profit. So net losses, $2.76 billion. So total stockholder equity remains at $1.411 billion. That was up from $1.317 billion in the same time, December 31st, 2022. So the company has taken that money, spent some of it on research and development, some of it has built out property and equipment, it's finance leases, operating leases, and so on and so on. And so the company has lost a lot of money on the bottom line in that process. Thankfully, it still has $1.1 billion left on the balance sheet in terms of cash and marketable securities. So let's move on to ChargePoint, which is further along in its business in terms of ramping up production and generating revenue. In fact, ChargePoint has been generating strong revenue growth for several years, and for the full year ending January 31st, 2024, ChargePoint expects to grow revenue at 32% compared to the same quarter the prior year. So ChargePoint has been committed to making it easy for businesses and drivers to go electric with one of the largest EV charging networks and a comprehensive portfolio of charging solutions. That's really where the company is focusing on, ramping up physical units of its charging stations and then generating recurring revenue when folks go to those charging stations to recharge their vehicles. Unfortunately, ChargePoint has not been able to turn this business into a profitable one, and it's had several years to do so. You could see in the most recent quarter, revenue of $150 million turned into a net loss of $125 million on the bottom line. You could see network charging station revenue of $114 million, and then the cost of revenue was $126.9 million. So negative gross profit margin on the primary part of its business. And then subscription revenue is profitable for the company, gross profitable, 30 million in subscription revenue with just 18.6 million in cost of revenue for subscriptions. The difficulty or the problem with that is that the subscription revenue is only 1/5 of the business right now, and so it needs to spend millions of dollars in ramping up production of its charging stations, which it loses money on for now. It's losing money on each charging station according to the latest quarter in terms of gross profit, so that it can get accounts signed up so that it can make money when people go and charge those vehicles. And even then, it's not very profitable in that sense, in generating 30 million in revenue, 18 million in cost of revenue. So gross profit 12 divided by 30, a roughly 33% gross profit margin in that area. Not incredibly lucrative, especially not lucrative enough to justify spending hundreds of millions of dollars in building this network so that you can get to that point where you're generating that recurring subscription revenue that is becoming profitable for the business. So looking at the company's balance sheet, there are a few troubling trends that turn out. Number one, inventory growth from January 31st to July 31st, inventory more than doubled to 143 million, up from 68.7 million. Now, normally I wouldn't highlight growth in inventory from a company that's growing revenue so rapidly, until I noticed that ChargePoint did take a several million-dollar write-down in terms of inventories already, meaning that their value of this $143 million of inventory might not be even worth $143 million. They might need to discount that and write it down in order just to get it out into the market, because it doesn't seem like demand is there for ChargePoint's inventories, at least to the degree that they thought it would be. So similarly, looking at ChargePoint's paid-in capital, investors have put in $1.648 billion in capital, and ChargePoint has lost $1.361 billion. That's the accumulated deficit for ChargePoint throughout its history. As long as it's been in existence, this is the total amount of losses the company has generated. That was up from 1.156 billion in the period before. So the company continues to add losses on the bottom line, having difficulty turning its product into a sustainable business. And so now looking at the market capitalization of these two companies, QuantumScape is trading at a market cap of 2.9 billion and ChargePoint is trading at a market cap of 1 billion. In my opinion, these two stocks are overvalued considering those metrics that we looked at, the net losses on the bottom line, how much equity they have in the business, how much cash is in the business, and how much they're losing every quarter. I would have liked each of these two companies to be trading at half of their valuations to make them more attractive. But if I had to pick one of these two stocks to buy right now, I would pick QuantumScape. Because ChargePoint has had more time to turn the business into a profitable business and it has had little success. Meanwhile, QuantumScape is on the cusp of bringing its product to market, and if it does bring that product to market, the suggested improvements in its technology compared to what's existent in the market could mean that QuantumScape could generate significant interest from customers, from clients, from OEMs, and potentially as a buyout target. So for those reasons, I would prefer QuantumScape stock over ChargePoint stock right now. But before I let you go, if you gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you for watching.